Good afternoon, everybody. Welcome to verifiedinvesting.com. This is Trading the Close with Gareth Soloway. And as always, I'm here to guide you through today's action. Well, we saw the markets initially try to push up a few times today, but overall, it was the semiconductors that were strong. Everything else, within reason, was pretty weak. And that's really taken some of the gains away. I mean, we see the NASDAQ eking out a small gain today, but it certainly is not a strong market. Let's take a look right now, folks, and see what we have. Dow Jones Industrial Average down 142 points. NASDAQ eking out a tiny gain of 10 points. S&P is flat on the day. Oil having a big move, and I want to talk about that in just a minute as well, because that's a very, very sizable 3.5% gain on oil. Gold is having a big move, only $30 away from 2,500, and Bitcoin kind of choppy today. Was up a little, was down a little, now slightly green again on the day, just back above 59,000. But the key here is it is not back above the key 60,000 level. Heat map wise, we can see the heat map generally red today, right? So see all the red, but look, this stock right here, 4.17%. That is what is keeping this market in check and keeping it neutral overall. So again, thank you, Nvidia. Thanks to the chip stocks today, whether it be AMD or others. Again, they are keeping the market basically flat. Otherwise, this market would be down pretty substantially. All right, so the key here is, by the way, you say, not only the heat map shows us the general advanced decline out there, but also if you want to look at the Russell 2000 clearly taking a beating today, and that is pushing us down. In fact, let's jump over to this. This is the S&P chart, but let's look at the IWM today. And if we look at the IWM, look at this nice red candle today on the daily chart. So the Russell, again, down about 1.05%. So over 1% drop in the IWM, which is the Russell. And again, for those of you that may be newer to investing, the Russell is 2,000 stocks. It does not include the mega cap technology names. And so therefore, it gives us a much clearer picture of the overall market, even, in spite of what the influence would be with the mega caps, which is much more the S&P 500 and even more the NASDAQ 100. Taking a look at the S&P 500 here on an intraday basis, this is where we opened. I put a little arrow there so we can easily track it. This, again, is the 10-minute chart. We opened slightly higher, had a little sell, then a big rally, then a sell, then a rally. And look at how it got smaller and smaller, right? It's like the biggest moves, the biggest swings in the market occurred early in the day and got tinier and tinier. And then here we are at the end of the day on the S&P 500, basically flat on the day. Just up a couple points. So overall, why? What's going on here? Well, the markets are staying somewhat quiet because we're waiting for the PPI data. Producer Price Index. It hits tomorrow at 8:30 a.m. Eastern time. That's an inflation gauge on the producer side. And then on Wednesday at 8:30, we'll have the CPI data, which is arguably more important. That's on the consumer side, Consumer Price Index. So again, two major inflation reports coming out over the next 2 days. And I think that's why the markets are kind of just, kind of seeing a little profit taking from the recent bounce that we saw off of last Monday's debacle. And really, again, the semiconductors got some big news, not really big news, but the analysts came out and really talked up the semis over the last 24 hours, talking about how great they're going to do. And that really sets them up potentially to fail, right? I mean, it does. It puts a lot of pressure as the stocks move back up. Looking at Nvidia today, we can see nice move to the upside on Nvidia. It is off of the highs, though. It's coming quite a bit off of the highs. The high of the day was 111.07. It's trading at 108.85 right now. So it is pulling back. In terms of the charts here, what we want to see here, again, if we look at this trend line, this would be kind of your max upside of where you could see Nvidia in the short term. So if we get good news on PPI tomorrow, you could see a pop up to about 112.50. That should be significant resistance. If it breaks through that, you could go back and even fill this gap over here at 123. And there's an additional gap right here around 126. Earnings are later this month on Nvidia, though, so just be aware. Apple on the charts. Take a look at Apple. 1, 2, 3, 4, 5, 6 green days in a row off of last Monday. Notice where it ran into struggles here today. right at the gap fill. So this big gap that was created from a week ago Friday to last Monday's open, that has now been filled, which is kind of like a checkbox for a stock. On a technical basis, usually that is resistance, and notice how price has stalled and pulled back off of that level here just a bit. All right. Next up, I do want to touch on Jetblue today. Jetblue taking a big drop down right now, 20.66%. The company basically doing a huge offering of debt. And again, the offering on this type of debt, what this does is essentially it tells you that the company's struggling. And I think the big drop here is not only because it's dilutive long term to be raising more capital, essentially, but also it just means that they're struggling. And if JetBlue's struggling, we know Spirit Airlines is struggling. And by the way, we're not even in a recession yet. And I would just caution investors to be very careful here on holding these long term. Now, I do think there's a big level of support. I was actually looking at this earlier. There's a big level around 370 here. If we put this trend line in, I want to show you guys this. Look at this trend line. So notice these two trend lines, this downsloping one, this one right here, they kind of coexist around this 370 to 380 level. That's probably a good swing trade bounce. But as we move more and more towards a recession, I would not be in the airlines on a longer term basis. Swing trades, sure, quick swing trade long for a week or two, maybe a month, but just be very careful if they're already struggling in this environment with the economy relatively good, what happens in a bad economy. All right. Quickly flipping over to gold today. Gold having a big move to the upside. Take a look at that, folks. Again, we talked about them. Gold almost nearing this 2,500 level. I do have a level right up here that I'm watching. Right up at this upper level, it's a $2,500 pierce. With my commodity service, Smart Money Commodities and Miners, I am along gold, and we are in the money pretty nicely here. But I probably, on a swing trade basis, would be looking to unload if it gets up to this 2,500, just because purely it's technical, has nothing to do with my longer term view. I'm a huge bull longer term, but if it runs up into this level here at 2,500, you would expect some sort of retrace pullback, maybe back to the midpoint line here, and we could just re-enter at that point. So again, nice little gain so far for Smart Money Commodities and Miners members. If we look at silver, silver is above one little level, but it's still stuck under this second level here, guys. So one of the things we want to just take note of is that silver is still in a much weaker position than gold. Gold is all the way up here, right? I mean, it's basically at all-time highs versus silver is stuck down here. That's purely the industrial side of silver. Again, more and more it's becoming an industrial metal versus a store of safety, and that means that it's going to be affected by economic outlooks more than anything. All right, Bitcoin, let's take a look. Today, Bitcoin eking out a small gain. Notice again, it closed above the 60,000 level on, I think this was last Thursday. But the key was that it didn't confirm, right? Didn't confirm back below. And so I was just going over this with members actually in the member video of Smart Money Crypto today, where what you do is when you confirm below, so here's a close below, here's your confirmation candle. So you've confirmed, and now it's a negative bias, right? When you close back above, all it does is bring you back to a neutral, not a positive bias, even though you're above. You must confirm above. Otherwise, it could be a rug pull by the institutions just trying to fake you out. In fact, that happens so often, people don't even realize. And sure enough, that's exactly what it was, right? And then we go right back down. And look, even today, the high of the tail goes right into that zone and it got rejected again. So right now, the bias on Bitcoin is short-term negative, even though I'm a big long-term bull. But again, short-term bias based purely on technicals and probability. Next up, let's look at oil today. Oil having a big move up. I've already annotated the chart out. This is what I'm thinking will be the good trading opportunity. Big bounce. If it continues straight up here, I'm looking to short around $82 to $83. That would be this beautiful wedge pattern. Notice the lows, the highs, they all align here. It's actually a very beautiful wedge pattern in terms of technical analysis. But what this tells us is that the probability is that a short will be very good to take right up in this range if price gets up there. It may not get up there, but if it does, that would be key levels. And then downside support would be right down here as well. All right. And then lastly, natural gas. As you guys heard in this morning's game plan, I did unload my UNG with Smart Money Commodities members above this trend line here this morning. And again, UNG being a long natural gas ETF. And the concept here was very simple, is that this always happens, and I've learned to use it to my advantage, is that when you have a multi-day up move like this and it pierces, first of all, a lot of shorts stop out, but a lot of people go long thinking it's a breakout. and it's usually not. It's already too tired. It's ran its marathon here. And when it gets above, it's usually just to kind of whip out the weak hands. We know, again, the confirmation signal. It didn't obviously get that. And it pulls back. And so we were able to unload our UNG above the line, and it's already coming back underneath. It looks like it's going to close underneath today. And ultimately, now I sit back and I let it consolidate or pull back. And if it pulls back, then I buy back in at the right setup when the technicals align. And I think that's so important to let the charts do the talking. As much as I talk on these things, it's really what I'm doing is translating the charts and the probabilities to you guys and what the likely outcome is. Not the certain outcome. We don't know that, but the likely high probable outcome. And that's how I trade. And the more you trade off of charts, the less you find yourself using emotion, which is usually, and I can speak from personal experience, how I've made most of my mistakes in my career. It's doing the wrong thing at the wrong time because I had an emotional response to doing it. And again, when people get in at highs on markets or low, sell at lows, it's usually that emotional response. All right, guys, let's see what those PPI data numbers are tomorrow at 8:30. I'll be on at 9 a.m. sharp with the game plan. Thank you so much for coming out and supporting Verified Investing, guys. We appreciate each and every one of you. Thank you again. Take care.